The Governor of the Bank of Ghana, Dr. Ernest Addison, has hinted of a possible maintenance of the policy rate, which is the rate at which the Bank of Ghana lends to commercial banks. The policy rate is currently pegged at 14.5%. He made these comments after the Association of Ghana Industries called on the Bank of Ghana to review the policy rate downwards. There is more in this report.
Quality and Industry Awards, dubbed Building Resilience and Local Capacity Thoughts After, was held over the weekend. The Association of Ghana Industries used the opportunity to call for a reduction in the policy rate. Vice President of the association in charge of small-scale businesses, Humphrey Eyim-Dake, tells Joy Business a cut in the policy rate to single digits will enable SMEs compete fairly with their sub-Saharan African counterparts when the African Continental Free Trade takes off in January next year.
Building capacity is the most crucial issue, and therefore we urge the governor that regarding the financial reforms that had taken place recently, it's our wish to see the policy rates dropping to a single digit so that we can compete fairly with the Francophone countries who are neighbors, as well as the European countries. That becomes the basis of cost of funding being reasonable for the SMEs to build on their capacity and their managerial capacity.
Responding to the call by the association to reduce the policy rate, Governor of the Bank of Ghana, Dr. Ernest Addison, urged industry players to stay calm as the monetary policy rate will respond according to fiscal measures implemented to deal with the economic challenges.
We probably need to have patience to allow the system to consolidate itself and expect interest rates to go down consequently. And I say so because if you look at the profile of policy rates over the last 3 years, we have consistently gone down on the policy rates over the last 3 years till January this year, when we stopped at 14.5%, and the monetary policy rate has sort of stayed there. And there are reasons why they have stayed there. You're looking at the impact of the shock, and the impact of the shock especially on the government's finances and the budget. So this is not the time to put the financing of the budget at risk by sort of going further down on the policy rate. And I think that as we move into 2021, when the fiscal challenges sort of moderated, one can reasonably expect the monetary policy rate to respond to those improvements.
The Monetary Policy Committee of the Central Bank is set to commence its quarterly review meeting from Wednesday, the 18th of November, 2020. Nicholas Brown for Joy Business.